Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, Chief Technical Analyst with Stickytrades.com. And if you're joining us for the very first time, welcome, welcome. We have some exciting news for you. Next week, we're going to be launching our website, which is easily found by just typing in Stickytrades.com. And you will be brought to a brand new website where you can log in, create your own new account. We have education. We have coaches, we have trade alerts, we have educational content, we have AI coming up for you here as I incorporate that into our trade alerts. And all of the videos that I do will be archived on our member page. In addition to that, if you are a current member of mine, just go to stickytrades.com. You can click on a link right there that brings you to a video that will explain how to migrate over to us from anywhere else in the world. If you're up in Canada, you're out there in Europe, if you're here in the US, click on that video and then that will direct you to the migration assistant right down below. We are working on the honor system here right now. So if you are a current paid subscriber and you still have time left in your subscription, do not worry about trying to get a refund from anywhere else. We will pick that up on our dime and we will fulfill the rest of your service until it expires. In addition to that, you go to our YouTube page and this is where you're going to be able to find our weekly market report and the midweek report. I'm going to be archiving the midweek report for free, and we'll also have alerts going out and promotional videos that will help you along the way. Finally, if you go to my Twitter page, you can pick me up there. Until we launch the brand new page next week, you'll be able to pick up my links for the Zoom calls for the next 2 weeks. Our Zoom calls will be open to the public for free, at which time it will convert to the member area only. And we are doing this as a big thank you for those of you who are out there trying to find me. Now, before we get into the charts, I just want you to know there's a lot going on next week. It's options expiration week. So Monday night, I'm doing an hour-and-a-half long session for our members, guiding them through my trade blotter, showing our members how to roll with the market. We call that dancing with the market. And I will go through the entire trade blotter, go through each one of our positions, and taking you into expiration Friday. So let's get to the charts. If you look at DIA, you'll see that my line from the midweek report is still there. My downside target is 341.84 for the diamonds. If you look back, you'll see that I have all my forecast lines from past reports, where here we eventually hit the target. Here we hit a downside target. Here we hit an upside target. Another upside target was hit, and we even went further than that. Downside target here missed by a couple of pennies, but I do think eventually we'll fill that. This upside target was hit from last week, and of course the short-term target that I have in place on the chart is still in force. Now, zooming into DIA as I continue to show you what's happening on the chart, if you look down below, the CCI is showing a negative divergence. I repeat this over and over again. We have a higher price high, but we have a slightly lower high on the CCI. That's known as a negative divergence. So beware, all buyers. We have a gap that's still open down below the market. I think that will fill. There's another gap that's still open on the diamonds down here that I think will fill. But again, my short-term target on that is going to be 341.84. So stay tuned for that. Moving on in alphabetical order, if I go to IWM, you'll see that we have a big fat negative candle right there. And we have an increase in volume on that negative candle. Now, again, zooming in a little bit further, that is a completed pivot point. We have a lower high, lower low. Gap below is still open. Wide divergence from the moving average. The CCI down here is about to cross with a sell signal. So my downside target for IWM short term is right back to that moving average at 187.62. And then longer term, I still have that downside target set at 178.66. So that's IWM. Looking at the Qs, this is pretty amazing actually. We had a shooting star today on the Qs with a shorter term downside target at the moving average. We have an increase in volume on that negative candle. CCI is pivoting lower. If I take a look at this on the monthly chart, you're going to be amazed because look at how overextended that chart is. We have 5 months in a row of up candles. Now we're just about halfway through the month, but we're not even a third of the way of the volume that we had last month. So we have sell signals showing up on the CCI. We have a wide divergence between the K and the D here on the stochastic. And if you're not familiar with these oscillators, stay tuned to my videos because I repeat over and over again what that means. I go through what's called a trading checklist. I help people with the checklist and showing them the signals on how they stack up. But right now, overall, the Qs are still looking very bearish. So my downside target for the Qs short term is 367.74, and I'm keeping that in place. Looking at SPY, which is the S&P 500 ETF, we have a negative candle showing up today. We had the stochastic down below, hinging here, CCI hinging lower here after, again, a negative divergence on the CCI. So that is telling me there's a high probability SPY is going to drop and hit my target of 442.49. Yes, we're still in a short-term uptrend, but the signals are getting more bearish as we go along each and every week. We have put spreads that are on combined with positive delta or bullish spreads. So we have a mix of both of those upside and downside strategies coming together. Now, finally, before I go and talk about silver, because I will, there's some things that happen in silver, I want to point out what's happened with the VIX. Today, we had a very interesting candle show. We have a pivot point here, higher low, higher high, that's also doubling up as a bearish engulfing candle. So we have to keep an eye on that. If we get a lower price action on Monday, I still think that the VIX is going to bounce off of that support level. So you have to keep an eye on that because we have a wide divergence between the K and the D on the stochastic, which is bullish. We have a hinge right there. See that hinge on the CCI? It's starting to go sideways. And my forecast for the VIX, if you've been following along each and every week, was that we would move lower and then move higher. So I think we're now at the point where the VIX is going to start to rally, and that could put pressure on the S&P. As I move into SLV, I make this very public with my trading. Yesterday, I sold another 10% of my position, and I put a price alert up here at 23.20 for a possible gap fill. The reason I sold out of my other 10%, now I'm 15% out of my SLV position, but I'm 85% still bullish. Right? So the reason I sell 15% and I scale out a little at a time is so that if SLV pulls back, and I think it will, to fill some of these gaps, guess what I'm going to do with the money that I generated from selling out of 15% of my position? I'm going to take that money and buy more shares back. So I'm parlaying that position into a bigger position every time I do that. So I'm very happy to make that announcement. I said I would do that. I also made the announcement last week that I sold out of 5% here after the gap up. Yesterday it gapped up even more. We got a spinning top on lower volume. Oscillators are pivoting lower, hence the reason why I'm selling out of the position or scaling out of that position. One of the other reasons I'm selling out of SLV is because if you look at the dollar, right, look at what happened to the dollar here. We are moving lower. The dollar is looking more bullish short term. And so as the dollar makes its pivot higher, you have to understand that the dollar and silver are pretty much inversely related. So as the dollar climbs, I believe silver will drop. As the dollar climbs, I believe that the overall market will again drop, and the VIX is supporting all of these ideas for more bearish signals than bullish signals. Again, thank you so much for following me over to Stickytrades. We have a lot of good news coming out next week. Remember, Monday is an open house webinar that's going to be targeting option traders. So stay tuned. I'm making that open to the public. Remember, it's going to be found on my Twitter page. You'll get the link for Zoom right there. And until then, you have a good rest of the week, and we'll talk to you next time. So long.